22% of Canadian home builders have to cancel their projects because of higher interest rate, despite this housing crisis that we're having right now. I'm going to be examining this on this week's reaction video. Now, if you are looking for some help on how to navigate this real estate market in the upcoming fall season, you can book a call with me using the link that's right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and I run and operate a Remax in the Greater Toronto area, on top of making awesome educational real estate content just like this one for you. And if you're enjoying the content, make sure you smash the like button and subscribe to the Prime Prep channel so that we can get a lot of this content out there, so educate a lot of the people looking in the real estate space so that they can actually make the proper decisions. So the first article we'll be reviewing right now is 22% of Canadian home builders cancel projects amid high rates despite severe housing shortage. This is what we talk about many times. Tons of people coming in, not building enough homes. We're definitely going to have some kind of problem. And because the higher rates is making these projects not feasible, they're being canceled right now, right? So what they're basically looking down here is that the builders remain downbeat amid high interest rates, with 22% of them canceling. Look, this article is very brief, but what they're basically looking at is this report from Canadian Home Builders Association, and I'm going to break into that. But one of the things when I kind of caught this article, I was like, I'm pretty sure I just saw on StatsCan that Canada just lost 45,000 construction jobs in July, right? Which is not necessarily a good thing. It makes me kind of wonder, like, well, do we still have enough construction workers to build what we need if 45,000 of them just got laid off in Canada? And again, I don't think we'll have that real data, but there is some anecdotal stuff in this report that I'm going to break down for you. So the first thing I'm not going to show you is on this left-hand side, you can see there's something called like an HMI, which is like a home market index. It's kind of like a sentiment kind of thing, right? So similar to the sentiment for like CPI or like the housing things, like the higher the number, the better, right? So right now it's at 40 for low rise single families and multifamily. So stacked townhomes or like condos, right? Like apartment condos, you're looking at like 41. So I'll show you kind of like a baseline. These numbers are actually very low, but I would say these numbers are a little bit foo-foo in terms of their methodology and how they calculate it, right? So you can look at it over here yourself. Like they're just taking responses from builders, and it's not necessarily all the builders out there, right? Because you can see here, are you interested in being a part of the panelists, right? So again, we don't know who these people are, how big that sample size is, but at the very least, it gives us a little bit of a sentiment reading. So don't look at this as like concrete empirical data. Look at this as, hey, a bunch of builders took a survey and this is what the surveys say, okay? So that whole 22% canceling projects is not all builders across Canada. 22% of them are canceling their project, right? So the first one we're looking to is the single family housing key indicators. And this is kind of what I was showing you, right? So right now, some of them are saying it's good, which is in the left side. Some are saying it's okay, which is like about half of them. And then the other portion is saying fair. So when you look here, the single family HMI history, it goes all the way back into 2021 Q1. And you can see that it was as high as 83 coming out of the pandemic. So that was when, like, you know, we had a really big bull market. And then going right up into kind of like Q1 of 2022, call it like the peak of the market, was at 90% or 98 or 89.4, right? So then it continued trickling down until last year, Q4 in 2022. And it has been going up, right? So this number isn't like absolutely gloom. It's getting better from last year. And we have the same kind of findings from the multifamily side as well, right? So you can see here, it was as high as 88 at one point, and then going down, and it's back up to 41. It's actually kind of strange because you can see in the last two charts that the number for single family was actually higher, but now towards kind of where we are right now in 2023, the high rise is actually higher. And I would suspect it's because you have more time with high rise for properties kind of to appreciate for what they kind of sold for and kind of where they are in like the permitting and the building stage. Whereas like with single family, we're having a lot of problems with like closing, and people bought them too quickly, and the closing is so soon from when they bought it, right? Call it like 12 to 18 months, that we're having some issues. Now, some of these like special key findings is where kind of the Star got the headline for the 22%. I'm going to go through it with you, and you'll see that come up later, right? So I highlighted a couple of things here that I thought would be of interest. So you can see of this panel, right? Remember, this is all kind of like anecdotal hearsay survey evidence. The impact of rising rates had an effect in sales office was quite similar to in Q2 2023, right? So 39% of them said that it did negatively impact them. So the amount like buyers going to the sales office has obviously dropped off, right? And that's given because people are afraid to buy right now, right? Now, they also said that the shortage of workers and tight labor market reflected in the fact that 44% of builders did not need to lay off workers. So yes, while 45,000 kind of construction jobs were laid off, almost half of them didn't have to lay anybody off because there was enough work in the pipeline for them to do, right? But 20% are still having to report they laid off some without having to rehire. So again, we don't know how big of these builders are that are on the panel, but I can tell you the big boy builders, right? They are fully integrated most of the time, and they have these trades basically on full time. They're not subcontracting most of them. They just work for this one builder all the time because they have so much stuff to do, right? So again, we don't know who these panelists are, so a little bit of hearsay. And this is kind of where the Star got the headline, right? So this says that 22% said that slowdown is causing them to cancel. So of the expert industry, 6-7 stated that the slowdown in the market is causing them to build fewer units. So 2/3 of the people are building less units because of the slowdown. And there's many reasons to it that I'm not going to get into in this video, so it doesn't become 20 minutes long. But the higher interest rate does have an impact on the fact that, you know, we're not building enough homes because these projects don't pencil, right? They don't make sense anymore. They're not viable. They're not profitable. When they're not profitable, builders won't lend to the builders to build these projects, right? Which means we have very little homes. But do we have enough construction workers to build these? At the moment, still probably not, even though 45,000 were laid off. This is just, I would say, anecdotal evidence. Until we see a lot of layoffs continue in the next few months and nobody rehire, then we know that we're having a little bit of problem on the construction side. But at the moment right now, this is still kind of like the first month, give or take. Now, they have some interesting charts here I'm going to go through. So a lot of here, this is kind of adding on to what I talked about earlier. You can see about 75% of them said that the interest rates have definitely impacted the traffic in the sales office, right? And again, like sales office traffic is not empirical data, but good anecdotal evidence from a survey perspective, right? And about half of them are concerned, like the builders, half of them are concerned about the rest of what 2023 looks like. And here's where it says how many people had to lay off workers, and about 44% of them have not had to lay off workers, but 20% of them have had to, and then the rest is kind of like somewhere in between, right? Now, this one is very interesting. I've heard a lot of anecdotal evidence, and people just ask me for things, right, in terms of like what to do. So the question they were asked was, are you experiencing issues of closing on previous sale? And they're saying, yes, buyers are having to seek alternative lending solutions, right? So half of them, which is given because, you know, interest rates have tripled. And then they said, yes, are you making accommodations to some buyers on closing? So about 1/3 of them. So I've heard many of the freehold homes that were bought in like during the peak, call it 2021, 2022. And then now they're coming up to closing, which I talked about like almost a year ago, that the 12 to 18 months from when they bought it, these guys would have bought at like 30, 40, 50% premium on the land and the piece of house that they bought. And now they're coming up to closing. And I'm hearing a lot of shortage of appraisals. I'm also hearing a lot of builders giving back vendor take-back mortgages equal in second position to the appraisal shortage. So what this means in layman terms is if you bought a property for $1 million and call it the resale value was worth, you know, $800,000 at the time. Now the market has come down and say it's worth $500,000. That means the home you bought, because you paid a premium on it, so the million to the 800,000, right? Now that home is worth 500,000. You're missing that $500,000 gap. So the bank isn't going to lend you at what you bought it for, like $1 million. They're going to lend you at what it's worth, which is 500, and now you have another 500 that's missing, and the builders are stepping in and providing a second mortgage to the buyers just so that they can close. Now I don't know the exact terms on these. Like I know some, but like. I don't know how the builders are planning to recoup this, or maybe there's an interest loan on it. Like, I don't know what they're planning to do if they're going to power sale. This is probably just to buy some time. So maybe interest rates come down and they can refinance. And I've seen this happen in 2017 and 2018, right? But these things are closing, but it's just, there's a lot of interest that's being accrued in some way, shape or form. And it's just not looking great at the moment. Now they also say here, is the slowdown in the market causing you to build fewer units? Yeah, 2/3 of them said more. And this is where it said 22% of them have canceled. And then another 1/4 of them said hasn't changed it, right? So it's like glass half full. The fact that, you know, there's so much builders out there building right now, and 3/4 of them, call it a little bit more than that, are still building, or they're just building fewer units, right? And not canceling is a good thing. It really is a good thing, right? Now they asked them some of the things like, what has the slowdown in the market done? They're saying that it got improved access to materials and trades, which is funny because there was a shortage of a lot of all that stuff, materials and trades, and now it's become easier for builders to actually build. And you can actually see over here are some of the things that they're having issues with, right? So they're still having issues with appliances and garage doors. I can attest to appliances. I've seen I'm not going to name anything, but I've seen that some condos come up finished where you're supposed to have stainless steel packages and they just couldn't deliver them on time with the shortage, right? So they just had like the standard non-stainless steel appliances and the credit was given back. It really sucks for the buyers, but you're allowed to do that in the pre-construction agreement. It's not that the builders want to do it because it, provides a crappier product, right? A crappier customer experience, but for them to meet the deadlines, they kind of have to do that, right? And then there's a couple other things that, I'm going to talk about in terms of like shortage and delays. And you can see over here that, some of them are saying that you're getting more than 9 weeks of home completion as a delay of supply chain issues, which, we're not hearing much about it right now, but there is some of it still kind of going on. And then the final thing that I kind of want to point out is trades are still up in price, about 58%, so that's just. But the access to trade is still being very difficult, right? So you can see because of this chart tells me that I still don't think we have enough kind of like construction workers there, because prices shouldn't be going up if we have enough supply of trades, right? So if we bring in more supply of trades, it should be kind of deflationary, kind of like how bringing too much immigration in is pushing downwards on wages. That's why a lot of people are applying for like minimum wage jobs and there's so many people wanting jobs because we have too many people looking for jobs. If we apply the same concept in construction, it'll bring prices down. But again, not everyone wants to see their income come down from the construction side, right? But we do need more trades coming in and potentially at a lower price so that we can build faster and build with better numbers so that we can build more homes at the end of the day. And then the final chart I have here is talking about what the relative increase of construction costs on a typical home is after the pandemic. And you see a good chunk of them saying about $40,000 more, but then another good chunk is like $10,000 to $20,000 more, right? But some of them are saying it's less than 5,000. So it's not like a huge amount, but as you kind of add this all up over kind of like long durations and the interest rate and the holding time, the performas and the numbers may not pencil. That's kind of why maybe some of those 22% of the builders that were asked in this panelist have to cancel their project, but not everyone has to do so, right? So the numbers are still working. They don't look as great right now, but the builders are still building. It's just, as we know, we're not building fast enough. Right? As you can see with a lot of the information, a lot of the data that's coming out as of late. Anyways, I hope this gives you an idea of what's going on in the real estate market. And if you're looking for some help on how to navigate this in the fall market, you can book a call with me using the link that's right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya. Now that I'm done watching this video, I think you should check out this video. And you know what? Why don't you check out this video too?